Good afternoon. Today is Wednesday and it's February the 7th. The time right now is 3 minutes past 1 in the afternoon. Overnight, we have another quiet session, unlike what we saw last week, in which the market was pretty volatile because we have the FOMC meeting as well as the non-farm payroll, and both actually caused markets to swing wildly. And this week is a welcome break in which the volatility actually dies down. And over the last 48 hours, we hardly see prices move. The high traded in the S&P 500, as you can see, is actually traded last Friday at 4,975.29. And this is setting the stage for maybe perhaps a pullback in a technical corrective pullback. And this is what I do expect. And in the Dow Jones itself, we can also see that the Dow Jones actually also have the same phenomena. We do not have new high traded so far this week. The high traded at 38,783.6 was actually traded last Friday, and prices has not really budged very much, and it is vulnerable for further profit taking. And in the Nasdaq 100, we can see Nasdaq similarly is treading water with a little bit bias to the upside, although I do expect some kind of technical pullback to ensure that ideally take the market to the 50% move from the rise at 16,249 to 17,682, and the 50% mark will be just under 17,000. And over in Asia, we can see the Nikkei 225 is also not doing very much. It's basically marking time, and we have a high here at 36,490, and that was traded last Friday, and prices generally has been trading lower. I do expect to see this trend to continue extend lower to perhaps to test the 35,200 levels in a three-way pullback from the high at 36,980 in the Nikkei 225 futures traded in Osaka. And we continue to see prices in Hong Kong continue to edge higher, as we have seen the Chinese equity market rebounds very, very strongly as inflows of capital rushes into China, hoping to catch the bottom in equity markets. But we can see the Hang Seng actually traded this morning to a high of 16,455 in the futures contract traded in the Hong Kong Futures Exchange, although the market since have pulled back a little bit to 16,175. This will be crucial. How the market closes this afternoon will be telling us whether this market has hit its temporary top. Although I do expect, I was hoping that the market can go a bit higher to 16,800 to actually finish the equality move from the rise of 14,796. And in currencies, we can see dollar remains very elevated, although we see a bit of a pullback from the high of 104.46, and this is actually traded on Monday, and prices since has been coming down. And if this continue a little bit more, I think this corrective pattern will give us a chance to anchor in long position at a much better level, because overall I do expect the dollar to continue to trade higher going forward. And in the currencies, we can see a bit of a bounce. And the bounce in the euro versus the dollar wasn't very prominent. We have a low of 107.23. The prices traded up to 1.0760 thereabout, and it's losing some kind of momentum. And if the market want to go higher, I think there's a good chance the market may edge higher to 108 level. But that's about it, because the rebound in the euro dollar has been pretty shallow compared to the other currency pairs. And in the sterling, you can see that the rebound is a little bit more prominent. Market hit a low of 125.18 and is trading at 126 currently, and there's a very good chance it may pull back a little bit before trading higher. And over in the Aussie also have a bounce, and you can see that this bounce has unfolded in a three wave, and this three wave here, although it's very, very minor, may signify the end of this move here. Again, we have to watch how this rebound unfolds, because it could be more complex than a simple three-wave bounce. And again, this is worth watching. And over in the other currency pairs, the one that I actually have a view is actually the dollar Canadian. Dollar Canadian actually pulls back almost into this bracket of prices, which last saw demand coming in. That level is 134.53 to 134.70. So between this, about roughly 20 pips area, if the market continues to edge lower, that could actually present us a buying opportunity for the market to take out the high here at 135.44. Okay, we have seen how the market has actually rallied up to this level on Tuesday, and there's a very good chance market may actually go higher. And in dollar yen, similarly, dollar yen pullback has been pretty shallow. Right now, we are beginning to see a bit of a pullback from the high of 148.90, and if this pullback continues, ideally we want to see the market hitting the 50% pullback from the low of 146.23, and that level is 147.70, almost 40. So do watch out that level as well. Okay, basically, I think we should continue to stay on the long side of dollar, in especially dollar Canadian and dollar yen. And in gold itself, now gold is rebounding right now. So far, the bounce has been a three-wave affair. I suspect it's going to be a larger degree three-wave, perhaps targeting somewhere just under the January close at $2,049.70. So there is a area here between the 50% rebound at $2,040.24 to $2,046.21. So anywhere between these two levels, I think there should be some kind of reaction. And if we do get a reversal signal within this area here under the January close of $2,049.70, I think that could actually set the stage for further losses. And this time the market may actually take out the $2,000 levels to test the $1,973. Okay, so I think this is the larger degree three-wave that may actually pans out over time. And in the silver market, we can say silver, although it has stabilized, but it has not been able to bounce meaningfully. So if there's going to be any bounce, it's going to be kept perhaps below the October low, October close of $22.82 before the market extend lower into this bracket of $21.74 to $21.92 over time. And in crude oil, you can see crude oil have a bit of a bounce, but this bounce is really very controlled in the sense that there is no aggressive bounce. And this bounce here, again, I have no firm view right now. The market hit a low of $71.37, although my longer term view is lower to buy, but there is been no classical signal other than this very bullish engulfing buy here at the bottom of $71.37. But overall, this market looks a little bit weird because despite all the rising tension in the Middle East and in particularly what's happening in Syria and Iraq right now, in which the US military has been taking out targets supported by the supposedly Iran, and this could actually cause escalation in the Middle East, but prices of oil has not reacted in any meaningful way. So we will have to watch that closely. And over in Bitcoin, now Bitcoin is actually marking time. There is a high here at 43,844, and the market pulls back. And then if this market doesn't take out this most recent high at 43,538, the market may actually be likely to trade lower. And if that's the case, I'll be waiting at 41,600 to 41,000 level to see if I can get some kind of good prices to anchor in a long position for a challenge of this high here at 43,845. This is all I have for you for today. In the meantime, you want to take it easy because the market is likely to be very quiet again. So have a good day, and I'll see you tomorrow. Bye-bye.